Everyone, and welcome once again to the OANDA Market Snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, I guess the best place to start today is with the FOMC minutes last night. Key focus towards the end of the week is on central banks, and the Federal Reserve were the first to step up. As expected, they didn't cut interest rates or raise interest rates, which was more likely. And the statement which followed, of course, there was no press conference, so all eyes were on the statement to look for any change in language, any hints that another rate hike was to come this year. We have to remember that at the start of the year, the Fed did suggest that we'd see up to 4 rate hikes this year. That was then cut more in line with the market expectations of 2, and following the Brexit vote last month, it's more likely that if we do see any rate hikes at all this year, it will probably just be the one, and people are still looking at December for being the earliest point at which we see that. People are looking at this statement for any clues as to if and when we can expect to see it, and there wasn't too much difference in the wording of the statement, although it was more positive than it has been previously. A few positive notes that the statement did have was talking about the strengthening of the labour markets, the moderate rate of expansion in economic activity, and most importantly, the diminishing of near-term economic risks to the economic outlook. Now, I think this is very important because this clearly, the near-term risks to the economic outlook, one of which was the Brexit vote. I think what this does suggest is that the Fed doesn't necessarily at this stage see any too much of a significant impact coming to the US economy as a result of Brexit, and to me that suggests that the Fed very much is intending to carry on with its plans to raise interest rates this year. There was no specific suggestion as to when that could come, and I think this is one of the reasons why the market has actually reacted in a dovish way rather than in a hawkish way, is the fact that they haven't necessarily hinted that it could come at the next meeting. So at the very least, it looks like even with the Fed is looking at potentially one rate hike this year, again probably in December, but really the market has taken this quite dovishly. We have seen some weakness in the dollar off the back of the FOMC statement, and if we actually take a look at the CME FedWatch tool, which I've highlighted on previous videos, you can see that we've gone from the market pricing in just over a 50% chance of a rate hike in December. That's now gone to a just over 50% chance, 53.1% in fact, of a rate of no rate hike at all this year. This just goes to show the reaction that the markets had to the FOMC minutes, despite the fact that, like I say, there was some positive language in them. For me, I think this was more of a hawkish statement than a dovish statement, but the market clearly disagrees with this and is now looking at next year for the first rate hike. But it is important to note that we are still really on the fence here. I guess the market is pretty much a 50-50 thing at this moment in time, and until the Fed clearly suggests otherwise, I think this is where we could potentially stay unless we see a significant deterioration in the data. Now, focusing more on today, I think it's quite clear what the key event this evening is going to be. In fact, throughout the evening and overnight, there's going to be a big focus on Japan. Not only do we have the Bank of Japan Bank of Japan rate decision and press conference in the early hours of tomorrow morning, there's also a lot of economic data to be released as well. And again, we'll bring up the economic calendar here just so you can check that out. You can see that there's a lot of data to come tomorrow. Of course, what I've actually highlighted on this calendar, this is the data which we've already had today. We've had consumer sentiment readings, unemployment from Germany, CPI, jobless data from the US. We've had a lot of data already today, some of which has beaten expectations, but none of which has been entirely surprising. We are seeing the euro trade slightly higher off the back of some of this data, maybe some of these sentiment readings beating expectations, providing a little bit of a boost, but clearly the focus right now is more on what's going to happen in Japan overnight. You can see there's a lot of economic data to come from Japan. We do have inflation data due just before the announcement, which will potentially give us some insight into what the Bank of Japan is effectively dealing with in its decision making later on this evening. We've also got things like the unemployment rate, job applicants ratio, household spending, industrial production, retail sales. A lot of economic data to come out just before this Bank of Japan decision, and if we get some more weak data here, particularly on the CPI front, then I think this could really feed into the narrative that the Bank of Japan is going to ease monetary policy. Now, the question is not only if the Bank of Japan is going to ease monetary policy. I think the market is widely expecting them to do so, even though this, of course, as ever, is no guarantee. It's also about what size of the stimulus package going to be, and what is it going to be made up of. There will be different reactions in the market to a rate cut versus QE versus other other unconventional forms of monetary stimulus. So it's going to be very important to work out how they do address this. There is speculation in the market today that the Bank of Japan may actually hold off as the ECB and the Bank of England did, and I think this could cause a bit of a jarring in the markets if they do choose to do that. The suggestion is that with the fiscal stimulus package that Shinzo Abe, the Prime Minister, announced this week, which was much larger than expected at around 28 trillion yen. The suggestion is that the Bank of Japan may hold off and let us see what kind of an impact that has on the economy and on CPI. But there is a good reason for the Bank of Japan to go along to to announce a stimulus package alongside the fiscal stimulus package that Abe is announcing. For one, the two do work in hand in hand better together than if they're done separately. So this may be seen as a big last-ditch joint effort to try and finally shock the economy back to life, per se. Also, the fact that inflation is still running well below target. The core measure of inflation, their preferred measure of inflation, is actually at 0.8%. The yen itself is actually 12% up on the year, which again is going to add to the deflationary pressures in the economy. So there's plenty of reason really for the Bank of Japan to work alongside the government rather than constantly leaving the operations, I guess, to the other. I think the Japanese economy as well is in need of this boost in terms of both growth and also inflation. So if we do see a big stimulus package from the Bank of Japan tonight, I think we will see a lot of relief in the markets, and I think we could see the markets end on a high if they do act in line with expectations. So I think this evening is going to be extremely key for the markets. Big focus on Japan, and depending on how the Bank of Japan reacts tonight, we will more than likely dictate the type of trade that we see ahead of the European Open tomorrow. For more in-depth news and analysis, check out OANDA Market Pulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.